Welcome to Alpha Recap. Today's episode walks through the market-moving headlines for March 9th, 2026. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Markets closed mixed today, with gains in technology leading some sectors and a bunch of corporate news keeping trading interesting.
Two big threads dominated the narrative. First, the S&P 500 rebalance actually added two optical component companies, Lumentum and Coherent, effective March 23rd. And second, Oracle's earnings were the marquee read on enterprise AI demand. Those two items together really validated the Photonics thesis for investors.
Right. The index move was more than symbolic. When the committee includes niche infrastructure names in the S&P, passive funds and a lot of active managers have to buy. And that can turn a speculative idea into an investable theme practically overnight.
Exactly. So, what really stands out here is that adding two Photonics names signals institutional acceptance. It's institutional plumbing saying this matters.
And they didn't just add Lumentum and Coherent. The committee also added Vertiv and EchoStar, so the rebalance had a mix of infrastructure and communications names. That broadens the lens beyond a single niche.
Let's unpack photonics for a second. Optical interposers and photonics move data with light instead of copper. The practical upshot is less resistive heating and much higher bandwidth per watt as data center fabrics scale. In plain English, you get more data, less heat.
Simple and clean. I mean, when you step back and look at this, the math becomes compelling. As AI models get bigger and interconnect density explodes, copper starts to look like a bottleneck.
But adoption isn't automatic. You also need lasers, modulators, waveguides, packaging know-how, foundry integration, and standards. There's an IP and standards arms race under the surface.
Yeah, that tracks. One camp says energy constraints and hyperscaler demand will force rapid rollouts. The other camp warns interoperability and multi-party fragmentation could slow things down.
Which brings us back to index mechanics. The S&P inclusion is a mechanical catalyst that creates near-term buying pressure. Passive flows funnel money into the newly included names, and that can lift prices while institutional ownership increases longer term.
That flow effect is real. For passive investors, you could see outsized returns in the short window around March 23rd because of forced buying. But there are caveats. If fundamentals disappoint, the flow-driven premium can reverse.
Exactly. Tactical window, not a free pass. And the number that really caught our eye in the corporate allocation discussion was Apple disclosing an $841 billion allocation, which the analysis used to show the scale of its financial firepower.
That headline always gets people thinking. They said Apple could have bought hundreds of S&P firms, but instead chose capital deployment that helped earnings per share. That's a reminder, balance sheet moves can change market structure.
Big move.
Not what anyone expected.
Switching gears, Oracle's earnings were treated like a live read on enterprise AI demand. More than half of S&P companies had reported fourth quarter results, and the index was on track for double-digit earnings growth heading into the week.
Oracle's guidance matters because its mix of cloud software, services, and enterprise relationships gives clues about hyperscaler CapEx and software spend. But there's debate. Is Oracle a bellwether for hardware demand, or just an Oracle-specific story?
Good point. Some analysts use Oracle as a proxy for enterprise AI adoption. Others caution that Oracle's particular business mix may not map cleanly onto every infrastructure supplier's pipeline.
Right, so it's useful as a signal, but you have to interpret it in context. Don't just flip a switch and buy every supplier when Oracle says CapEx is strong.
Let's talk risks. Energy price volatility was flagged as a near-term constraint for data centers. If energy spikes, the ROI on power-hungry copper interconnects changes and photonics becomes more attractive.
Energy is a real wild card. Some argue war-driven or geopolitical energy shocks could accelerate adoption. Others say energy markets are episodic and upgrades require multi-year ROI, which dampens short-term demand.
So investors have to decide whether they believe in an immediate structural shift or a longer, more contested rollout.
And that leads to the valuation debate. The S&P inclusion raises demand, but do current prices already price in a multi-year supercycle? Optimists point to secular demand and forced flows. Skeptics worry about smaller photonics names facing margin pressure as incumbents consolidate IP.
For active investors, the theme is about picking companies with defensible IP and clear paths into hyperscaler supply chains. For passive investors, it's about timing the rebalance window and managing the mechanical risk.
Event-driven traders had a full day too. The S&P rebalance effective March 23rd creates a tradable window. Add Oracle earnings volatility and a slate of 8K filings from various companies, and there were plenty of catalysts.
Those 8K filings, things like material agreements and officer changes at companies such as TPI Composites, Spruce, Dianthus, Battalion, and Talkspace, remind us that idiosyncratic corporate events still generate cross-sectional volatility, even as macro themes dominate.
Absolutely. You can't ignore firm-specific catalysts. They often provide the best trading opportunities, especially when headline themes have already moved the big cap names.
We should also mention Amazon's strategic expansion in India into fintech. That opens a recurring revenue path outside core commerce and tightens competition with local fintech players.
For Amazon, payments and financial services amplify monetization per user and deepen the ecosystem. For incumbents, it raises the regulatory and competitive bar. It's another example of corporate capital moves reshaping long-term competitive dynamics.
Let's make this practical. What should different investors be thinking?
Passive investors expect short-term, flow-driven, outsized returns for newly included names, but beware reversals if fundamentals disappoint. Active thematic growth investors focus on IP, hyperscaler pathways, and path to profitability. Value and income investors consider larger, cash-generative suppliers in the chain. Monitor dividend stability. Event-driven traders use the rebalance and earnings volatility as opportunities. Risk-conscious allocators hedge energy exposure if power costs threaten data center economics.
Good framework. My takeaway is overweight, well-capitalized photonics and system suppliers with clear hyperscaler relationships. Keep position sizes disciplined, and don't pay frothy multiples for small names without moats.
And tactically, use the March 23rd rebalance for short-term trades, but plan for execution risk. Track IP partnerships and standardization milestones. Those will tell you whether this is a smooth adoption or a fragmented mess.
Quick reaction round?
Sure.
Photonics to mainstream? Big step.
Oracle beat or missed? Market moved.
Apple's allocation? Huge influence.
Amazon in India. Watch payments.
Okay, final takeaways before we close. First, the S&P additions validated photonics as an investable infrastructure theme, at least in the eyes of index decision makers.
Second, Oracle's earnings were the immediate barometer for enterprise AI demand. Useful, but interpret with nuance.
Third, corporate capital moves like Apple's enormous allocation and Amazon's expansion into Indian fintech are reshaping sector exposures beyond product cycles.
Fourth, risks remain. Timing of adoption, IP consolidation, standards, and energy price volatility. Hedge appropriately.
Those are the headlines and the filter we use today. If you want a quick recap in bullet form, we'll post this episode and the notes on stockalpha.ai.
And if you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll be back after the market opens to see how these themes evolve. But for now, market's closed for the day and we've got plenty to watch ahead. Until next time.